This is Justin Pulitzer. This is my weekend review video for Sunday, October 18th, 2015. I didn't get to do Periscope this week because of some technical problems in the platform, so I'm going to try and make up for some of that work here. This video is probably going to be a little bit lengthy. It's going to cover a lot of stuff, but hopefully we'll get through it quickly. Anyhow, let's start off with my 6 keys. You know, we've been discussing that the VIX, the UUP is the dollar, the bonds is TLT, oil, USO, China FXI, and IBB is, of course, the biotechs. So with regard to the VIX here, you can see we are now making lower highs and lower lows. It's held supports on the way down, some various resistances which have now become supports, and now it is kind of making its way to the lower end of the range. I had said in last weekend's video that I thought that the mid-14s to low 15s would be the could be it for the VIX, that I didn't know if we were going to traverse the entire range lower, but maybe make it mid-range. And we're starting to get close. This closed on Friday at 1505. So a little bit lower could be kind of it for now, and there might be a bit of a correction in the market, and the VIX could have a bit of a rally back up. We'll have to see how that plays out. But the fact that it is making lower highs and lower lows and lower highs is a good sign, at least if you're long stocks. The UUP, I had said last week that we were in a little bit of a precarious spot, and I expected some fireworks. It was making higher lows, but kind of equal to lower highs, and now it snapped. It's now making lower lows. It did kind of catch itself, but the fact that this snapped is a good sign if you're long stocks. It's a higher dollar is very bad for equities. As we know, a lot of companies do business overseas, and as we've heard on Facebook conference calls and various other company conference calls, the foreign currency exposure is been wreaking havoc. I don't think that this is going to be, obviously this isn't enough to save them for this kind of third quarter, but if this could kind of start rolling over, that could be some more visibility for some higher earnings in future quarters. So the lower dollar is actually good for the market here. The bonds, as I've said, the key here is really to stay over the 2009 crash high, which is 123.15. It doesn't even need to really rally. It just doesn't need to fall apart. No matter what TV talking heads talk about, most of which who have never traded or touched really any type of portfolio money management outside of probably their 401ks or IRAs, don't really seem to understand that there's an inverse relationship between price in yields and stock prices. Stock prices are determined based on a discounted cash flow basis, and with DCF analysis, if you have a higher interest rate, meaning lower bond prices, the amount of the stock or the PE multiple people are willing to pay is lower because there is more competition from bonds. As bonds go down, their yields go up. If you're making 5 or 6% risk-free, what's the incentive to, kind of roll the dice and gamble on the stock market? If, however, yields are lower and their bond prices go up, people are more willing to, try and reach for alternatives in terms of stocks for yields or to get absolute returns. I think that a lot of the reason that the MLPs, and I don't really want to get into those, and some of the dividend stocks have been coming down is because people had thought interest rates were going to go up, and they were kind of freeing up their cash. They've been, they're sort of really not stock owners. They've just been forced into there, and that's, they've been kind of clearing the decks to maybe get back into bonds if they've come down to get higher yields, but that hasn't happened, and I believe that that's what's kind of kept this market propped, is that as long as the Fed is going to stay lower for longer, which I do believe that they are, and I've said before, I've started to warm up to the idea of a QE4, although I don't believe that that will happen until after the first quarter of the new year and maybe potentially in next summer. I think the Fed is going to try and hold off as long as they can, but if, the growth data keeps coming in this week and they're not reaching their inflation mandate target, which they said that they want, 2%, and they don't even see themselves reaching that target until 2018. I mean, why would they wait 2 years? to kind of roll the dice themselves and wait for, the economy to get better, they might try to narrow that gap. I said in Periscope last week, it's sort of like stepping on an accelerator in a car. If you're going out to the Hamptons and it takes 3 hours at 55 or 60 miles an hour, you step on the gas, you get there in 2 hours, you get there in an hour and a half or what have you. You probably get a huge speeding ticket, particularly once you get past the exits in the 50s where the cops really wait. But, you would get there theoretically if there weren't any policemen there, you'd get there faster. If you go 100, you'd get there faster than if you go 55. So I think that they might want to do some more QE to kind of cut their trip out to Manorville. Anyhow, that's the TLT. USO is looking a little bit bullish, but sort of not doing its best not to show its hand. It rallied up. It's kind of been bull flagging. 50 MA has been really tough to sustain over. Finally, we got to move over there. Retesting. It held. These are bottoming tail patterns. Hammer bottoming patterns, and it looks like it probably wants to push up a little bit higher, which is good. However, one thing that has me a little bit cautious in terms of stocks is Exxon. They have a downtrend line here, a channel high a little bit higher, and a gap fill up here in 83. So I think kind of up here there's going to be some muscle memory. You can see over here closer to 84s, 85s. This is really where the major breakdown sort of started taking place, and there's a lot of volume up here. So as Exxon maybe rallies up, also a declining 200-day moving average, I do think that into here is going to be some right or right out short type of area to put on a good trade, particularly after multiple days up. I do think that this sort of 76 area, if it does come back down to retest there, would be a good right or right out area to buy, but let's be a little bit careful if we're first parlaying into Exxon here for the first time. I have been bullish on it, but I'm starting to want to flip a little bit more neutral or even maybe test for potential right or right out short. FXI, this was a little bit controversial, but I was starting to get a little bit bullish on FXI, and look what's happened. We have rallied up. I think I might have been one of the only people who was maybe a little bit more bullish on this, but anyway, that's neither here nor there at this point. You can see, though, we are kind of entering a little bit of a volume distribution. This is sort of where the more major breakdown took place. You could see here the 39s. Look where we're rallying up to. There's also a bit of a channel here, so if you're, pressing Chinese longs, you might want to be looking to take some profits as we get into this area. There's probably some muscle memory. You can see there was low 40 into the 40s here. This is sort of where the rubber is going to meet the road. I do think that there can be some type of a pullback. BABA has been really strong. That's been sort of like a proxy for China and their exported deflation weakness. You can see that there's a downtrend line from a long time. That's from the all-time high. Then there's a secondary one from here, and we're kind of stalling into here, and there's maybe a little bit more of a run up here. It also coincides with the 100-day moving average. There's also some reference lows here in the 77, so if it does even wind up breaking the downtrend, I don't know how much further it's going to go, because this is like where the real breakdown was in the 76s and 77s, and then 80 up here is really where the volume starts to pick up with all the people who played by the dip up here and were, wrong and now haven't been happy are probably going to be looking to get some of their money back. So I think that somewhere in here, there's an area to, there's a potential short for some type of a rollback. I do think that BABA might have the worst of it behind it. Those could be famous last words for me, but it really might be at this point. We'll have to see. This is a pretty powerful pattern. It is starting to make higher highs. You can see it's taking out these highs. So I really kind of want to see how it handles a pullback. Here it handled it pretty well. It held the 50. So let's see if that happens again. This is a little late if you're first buying into BABA. You probably want to be looking to sell into further strength. But I do start seeing this, maybe it's starting to turn. The IBB has really become a very key ETF. I've discussed that this obviously has a lot of weighting in the Nasdaq, but there's some hidden weighting. I think it's like 15 or 16% of the Russell IWM is made up of smaller biotechs, and this had a head and shoulders top. It had a classic breakdown. It went even further than I thought it might. We got close to primary trend, but stopped a little bit above there in the 61.8. And the old breakout here, which was 275, this was the flash crash day. It rallied back up. It touched the downtrend. But this is basically a failed check back. You could see what happened. We retested this area, and we bounced. It's been a rather weak bounce. I know everyone talks about biotech being really cheap. It has low PE multiples. The problem for that is when an industry really does top, the PE ratio always looks the lowest because they're at their peak earnings. I don't know that that's the case here with the biotechs, but I can say this, that if that is the case, this has a huge amount to fall. Let's use this was the day preceding Hillary, the Democratic debate. I had been a little bearish on biotech this day. This was almost like a freebie short. You had to know people were going to be very nervous going into that debate. It wound up being, kind of a bagel, and then it took the next day it kind of just chopped, small bounce. And then finally, there was some relief. So as long as you're over like this 312 area, I think you can be long cautiously. If you start getting below there, let's just say the 310 because that's the pullback low of this day. If it's below 310, just GTFO. It'll probably traverse back to the lower end of the range. But if you're playing long, use that low as a stop. If I had my druthers, this would kind of rally back up, test back the backside of the secondary downtrend line and the old uptrend line, and where it meets the rubber meets the road with the primary downtrend line, and also this volume distribution, and this could set up for a great short. It's possible this just goes sideways and collapses, but it's sort of yet to show its hand. And I don't know if the peak earnings, theory has kind of played out. We should know a little bit more on Wednesday. Biogen reports. I saw their CEO on the other day. I don't know. He wasn't really that inspiring to me. This has just been listing lower since the gap. It's sort of, these are like this is sort of like poor lows, believe it or not. It rallied back up. They have their earnings call here. So this is either going to probably run and retest the downtrend line, or it may want to have the next leg lower and kind of test down into like this 61.8 Fibonacci area of the 206s. We'll have to see. Like I had said, I want to just go back to IBB. The breakout. I'm just on too long of a time frame here. I'm sorry. Let's go 2 years daily. Is that okay? Yeah. 275s, ish area was really the breakout. That's really too close to here at this point, so I don't know that would hold, but it might want to come down to the 78.6, the 248s. We'll have to see. I know it's a big move, but if you lose these double bottoms, this is just going to be a free fall. I mean, these are the flash crash, the retest. If it becomes a failed retest, this is going to be real ugly, and things are probably going to get really pretty much worse in the stock market. So we'll have to see. This does have room to rally, though. So I really want to see how that IBB goes. The Biogen goes. My favorite has been this Gilead. They've really crushed their numbers. However, this is also starting to kind of roll over a bit. Lower lows, lower highs. I do think that this low here, 85, was sort of the breakout. I do think there'll be some muscle memory if it comes down there again. I'd probably be looking to sell some out of the money puts, maybe 80 strikes or below here. You could see there was some memory between the 75s and 78s. I think that area will probably hold if it's near term. However, if like I said, if they miss and it's ugly, we'll have to see. That's really kind of my story with these. This is going to be important. We should get some more clarity, I think, with Biogen. I do think that there should be some clarity with that. So let's talk about the major market indices while we're still young, right? So the Dow has broken out. It even with the weakness in Caterpillar, Boeing, and my God, in Walmart. Holy cow, has that thing been creamed? I'm shocked that this has been as strong as it has been. I think Intel, Microsoft, and Exxon have kind of carried the weight. Apple has just sort of been steady. You can see this is above the 170. That's really the key. If it start getting below there again, it gets a little iffy. I would say maybe to the 50-day moving average. There is some room, though. If this does want to rally into the year end, there is some room up into these lows here in the 176s. So we'll have to see how that's going to play out. This is looking more bullish, though. I mean, look, these 2 days. I'll discuss this more in SPY. Actually, I could do it now. In SPY, I had said that the day that this was rallying really on. Let's just jump into SPY while we're at it. I had said that these days here were kind of forcing action, that the market was going down on like positive breath, or even like maybe 2 to 1 or 1 to 1 to a little over 1 to 1 negative. It was just really not like real serious sellers. This was just like cutie pies trying to short the 61.8, and we held the 50. This gap caught a lot of people, a lot of stupid people. Who were pushing shorts on days where technicals weren't confirming. I mean, these days were making new lows on like higher ticks. The breadth wasn't bad. Like the momentum stocks were strong. I mean, it really wasn't that bad. And like here, this gap, and I had tweeted it, that the gap caught a lot of people. It actually hesitated here there was plenty of time to get in, and it ran. And then, there was a minor kind of pullback. It held here and then rallied on Friday. The kind of what, however, is this. We are up above, a little bit above the range high, but we are coming into some more kind of muscle memory. Look where this distribution begins. It sort of starts building between the 204 and 205. That's also roughly where this downtrend comes into play. I had drawn this circle a while back. I could actually disregard it for now. It really should be over here now. This is the old side of the 2011 to 2015 up channel. The back side of that, with a touch of the downtrend and also into this volume distribution, I think is a great right or right out short, particularly if it happens in gap fashion. Like if we gapped up on Monday or Tuesday right into here, oh man, you got to lay into that. At least for a right or right out play. So between 204.12 and 205.38, the expected move this week is like a little less than $3 in SPY. So that would roughly be there, would take you there. So this area, I think, is going to have some muscle memory. I would be a little careful if chasing, I think that the risk on a move down would be back into range. Potentially, if this really, rejects, you could fill the gap to the 195s. It's very possible. I at least now to retest maybe the 197s. It's it seems like a lot, but it's possible that this could come back down. I do think that there could be some more, like I said, some more push higher, but I'm a little bit more cautious than I was, for example, buying here when everyone was screaming that we're going back to, basically to zero, that it's 2008 and 9 all over again. I said that you could just go back if you want, look at the date, like to the minute. I said it's getting too pessimistic, we're due for a bounce, and we held, and the rest is history. Now I'm just saying, I'm starting to get a little bit cautious as we're getting up into the old muscle memory there. I didn't talk about Walmart before, I will now. I want to show you this on a longer time frame. This is pretty cray-cray, right? Look at these lows. There's a primary trend in green, and then like a kind of a trend, but a little less. It kind of connects these lows. It ignores this move. That stopped right on this trend, like to the tick. But the primary trend comes in a little bit lower in the 54s, and you can see there's some reference highs here in the 52s. So I think the mid to lower 50s in Walmart could be a good area to sell some out of the money puts or to start nibbling in the stock. There could be a bounce from here. It would not shock me to see this kind of make up some of the loss here. This is, maybe to retest like where the breakdown was in the 63s. maybe, I don't know, yeah, like 63s. We'll have to see. That's even a lot, you know. But this is not a good pattern. Maybe it comes down a little bit more, although we are starting to get late. You know, it's sort of, people already know about Walmart. You know, they've been selling it for a while. It did try to rally. This is a huge engulfing pattern on a weekly, which is really bearish. But I think this is they lowered their earnings estimates for like the next 2 years. But everyone knows Walmart's kind of crap. I mean, I heard people comparing it to Sears and to Kmart. That's really not the case. Walmart is a much better company than those companies. You know, they are suffering a lot because people are buying online. Amazon, we all know the story. I mean, this is not new. Bricks and mortar has been having trouble for a while. But I think a lot of this is self-inflicted on Walmart. They have been like raising wages and doing a lot. They're really very poorly managed company. Unfortunately, the Walton family owns a lot of it, so I don't know how well like a Carl Icahn or some activists could do in there. But it really wouldn't shock me to see if some of these activists might start getting involved here. But we'll see. I would, like I said, anyway, regardless of any of that, I do believe a little bit lower here, and it's a good area to sell some puts. So that's SPY. IWM, let's get into like modern times here. IWM is kind of just sputtering up, the backside of this prior, to the downtrend. And it's kind of like just kind of peeking into the range here that we've been in for a while. This is showing a lot of relative weakness. I think that this is probably a victim of these biotechs that I've been talking about. And you can see there's some volume here where there was some muscle memory. And I think people are just kind of looking to, kind of get, if they were chasing up here north of 120, they're probably not happy. There was, some muscle memory here. People are, getting their money out. The Qs have been kind of like the curious case of the strong Qs. They never lost the range, really, other than this flash crash day, which tested trend, and the day after, which kind of looked below, but it rejected really quickly. We got back into range. Here you can see they try to look below again. It rejected again. And this is firmly, comfortably over the downtrend. It is kind of getting into the range high, but there's not a lot of damage in these stocks, like these big momentum stocks. I'm going to go through them in a little bit, and you'll see what I'm talking about. It's really rather impressive, actually, what has happened here. Also, if you look at the SPY, look where the pullback was here. This was the Fed breakout. The one I can't really show you this properly on this chart. Let me ESZ5. Let's see if we can pull that up. /ESZ5. I might not really be able to show this that effectively. Well, just take my word for it. This 1985 here, that was the Fed breakout from the minutes. It retested there like to the tick, exactly to the tick, and then look where how this took off. So this hasn't been that crazy bearish as far as the it's been holding technicals. This has been, all of these moves have been really technical. Anyway, not to get too off topic there, but let's look at some of these big heavy cap, these big stocks like the Apples. You can see, I hate how this chart looks right now. Let me bring this to 9-month daily. All right, I feel a little bit more comfortable here. You can see we've been in a down channel. This is really just chopping below the 50, roughly around the 20. It's right at the down channel. My ideal scenario here would be for this to fall apart ahead of the number on some type of panic selling, like multiple days that look like this. Get out all of these buy the dip and long Apple because they love the watch and the phone and all this junk. Let it come down, retest into this area here, and then it could set up for like what I notoriously refer to as shake and bake. You can see here, this was before the big move in Apple. I'm going to take you into a year. This rallied up, and then you had the shake and bake. You had this big day here that took out all these days and all these chasers. And then I had actually, if you go back to this, I discussed shake and bake, and I thought that the stock would go higher. And then it did. It gapped and it rallied, and we all know what's happening. However, this looks starting to look a little bit like a big top, a little bit disconcerting with lower lows off lower highs. If this breaks ahead of the number, which it did here, it to me might set up the same way. If this does pull back, that would be good. If you take a look at where the earnings are and where the channel low coincides with, it's roughly around the 92s. So I am a little bit concerned about earnings if Apple does wind up if it does wind up sort of just chopping sideways or not rallying. But it is working off a lot of the excess. Like I said, the ideal setup for me would be the shake and bake, to go lower ahead of the number and then get everyone nervous that they're going to miss and whatever, and then they do what they always do and pull the rabbit out of the hat, and then the stock rallies. So that's sort of what I'm thinking. We don't have to really worry about Apple this week. We do, however, have to worry about Amazon and Google. They're reporting. I had said last week in the weekend review that this pattern to me looked a little bullish, and you can see it is resolving higher. There is going to be supposed to be, I think, like a almost $50 move. It's like $47. Wouldn't shock me to see if that builds a little bit more, and particularly if this keeps rallying. There are some Fibonacci extensions that I had discussed. The big 2.618 is 606, and from this range here, the 1.618 is 660. Holy cow! Wouldn't that be something if there was a $100 move in Amazon? Anyway, we'll see what happens with that. Let's not get ahead of ourselves. The 580s are coming up. They loom large. It's getting close to the channel top. It's been up for multiple days. It's probably a little bit late to chase this, in my opinion, if you haven't been in it. But the pattern does still look bullish, and they are reporting this week. Another one that has looked bullish is Facebook. I had said to be a little bit cautious with these topping tails. If you were going to try to play short, you needed to have a buy stop over there because that's the downtrend, and also 2 topping tails. It did rally up. I wasn't really advocating playing this short. I like Facebook. I think it's going a lot higher longer term, but I don't love that it's rallying ahead of the number. They have had foreign currency concerns for quite some time. If it keeps rallying into the print, I am going to be a little bit more cautious than not. Google reports this week. We all know what happened the last time that Google reported. Facebook got a lift. This could be deja vu all over again. Is that the old joke that they say? It would not shock me to see Facebook get get jiggy with it on Google earnings. Since we're talking Google, I had been planning on discussing them a little bit later, but let's discuss them. I know they call themselves Alphabet now, but I will never, ever refer to them as Alphabet. They're always Google to me. We are getting a little bit close to these old highs. I don't love that it's rallying into the print. It's also getting close to a down channel high, the old highs. So the risk reward, it's a little bit late if you're first chasing now, but the pattern, to me still looks a little bit bullish. I think that they're doing well, Google. Another stock that's held up high. It's really just a couple of points off its all-time highs, and it's just been consolidating. It filled the gap. It kind of tried to come back down again. The 615 really kind of held for the most part. This even closed above there. Here you had a little bit of a close below, but it's been strong. If Google winds up coming in weak and they get anywhere near like this 575, which is primary trend, or between there and 583, like if there's like a big gap down, like some kind of outsized move, this is really where it broke out from, and this is really where you probably want to buy it or sell some puts into. So I wouldn't mind doing like some kind of like crazy put ratios with the lower strike being here if you want to play for the down move. But the pattern does look pretty bullish still. We'll see. I would love to. This to me would honestly be the ideal scenario for Google to gap down here and to sell some out of the money puts and play it for a bounce trade. Google would probably want to fill the gap at some point. FireEye. These cybersecurity stocks have been a debacle, and I had said that I thought that they were feeling really heavy rallying into this move. It felt really forced. You can see, look at this. This was all news, and it was just kind of jumping. It's really getting weak here. Someone asked me on the stream the other day, and it was like right on this day. I think it was kind of like toward sort of first reversing, and I had said that this was getting a little bit stupid already. You know, that I do believe that these stocks are sort of, the stocks themselves might be kind of peaked, but the story is still good, and this has come down a lot. Yeah, it could get the 27s, maybe it gets to the 24s, 25s, but it's come down a lot, and it's been a lot fast, and it's sort of just been all at once. So I had said that I thought that there could be a bounce. There has been the bounce. It's up into the range. Let's see how this goes. There could be a little bit more room to the upside for some rally, but these cybersecurity stocks have been rather weak for a while. But FireEye, I did sell some puts into here. We'll see how that goes. If we start coming back down and retesting quickly here, I'll probably just bail on those and try and get out either break even or for a small loss. Speaking of these types of stocks, the GoPros. So this is kind of hilarious. You all know, anyone who's followed me for a while knows I've absolutely hated this stock for forever, even from back at the highs. I mean, I never was on board with this stock from the IPO, and never ever really on board with the stock. And it has come down in amazing fashion. I had discussed this being like, you know, a short that I thought could get back down to 25, maybe even to single digits at some point. However, Morgan Stanley and some other guys decided to downgrade here. So you're at the all-time low, the reference all-time low from back here, and you're first downgrading it here. What happened here? What happened all the way down? That to me is starting to feel capitulatory. You can see it's just struggling to make lower lows. I don't know that this quarter is going to be good. It's probably not. But I do think that this stock could have some kind of a bounce. I'm actually, as crazy as this sounds, I'm along a little bit of GoPro here. I don't know if I'll still be long when the quarter rolls around, but I probably will, bounce if it breaks the 2668, GTFO. But this could have a rounded bottom coming here. It could really rally up to retest these 37s. I know it sounds crazy, but it's really possible. The one thing that has me a little concerned on that is this Ambarella. It is kind of really bear flagging here, and I think there is going to be another maybe leg down. The breakout on Ambarella, 2 years? Yeah, look, see down here, the 36.49. This was really the ceiling for multiple occasions, and this is where it really kind of took off from. It would not shock me to see it come down there. That's also the primary trend line from like back in the day. This to me would be a great spot for right or right out with shares and or selling out of the money puts, particularly if it comes down right into earnings. Look at that. That would be like the ultimate setup, but has me a little bit cautious. Netflix, go back, look at the tweets. I said that I thought 115 was the sell. It was. I've had some people trolling me because I had said that there was potential slippage to 119s, meaning, this is a big stock. It could have slipped a little bit, but it said I was pretty clear. I thought 115, that was the gap fill. I didn't not like that they raised prices ahead of the quarter a couple of days before. You got a really violent move in the stock. This looked really crazy. It was a really big outside day, but to me, it just struck me as the sell, and it was. This stock is breaking the channel here. It would not shock me. This was the after-hours low, 93s. It never saw that low, but I think it might want to retest there. I think it might even want to retest the 61.8 at in the 77s. This low here was 85s. That was the flash crash. To me, this feels like a magnet, at least down to the 93s. Maybe I'm wrong. It's possible it can go higher, and maybe it wants to fill the gap first. Stocks don't always cooperate the way you want them to. That would be to like 109, 110. But for me, I like playing put ratios. I think this wants to go lower. If you look at a much longer time frame, I want to kind of get wrapped up soon, so I'm not going to go back. But the 69.90, I think, is where Morgan Stanley or one of these firms. I've been talking about this for a while. This was really the major breakout where this really got this whole move going from. If this came back down into here, I think you buy it. You probably want to sell some out of the money puts. 57 is roughly the primary trend. I don't know if it's going to get all the way down there. That was really right where Icon kind of got out for the first time in the 55, 59 area. I don't know that we're getting that low. It's possible. I mean, there's still so many downgrades and earnings cuts that could come on this, that it could just kind of come down there, but I do think down here, somewhere between 93 and 85 is going to have some muscle memory, more between the 85s to for short term to sell out of the money puts, or if you want to play this with put ratios, I think that for the move down, I think that would work well. Price line has broken the downtrend. If you look at this, this could just be one big up channel in price line. Look at this. The stock gapped. It had a huge gap on earnings the last time, and then it just completely fell apart. Doesn't surprise me. It had run a lot. Look at this. It had run a lot, pulled back, ran. This was a ginormous day. This gap was just, if you were long, you had to sell, right? Look at this. It basically came up, retested the old high, pressed a little bit higher, and there was just responsive sellers. It sold off, and now you're kind of coming back up there. You're over the downtrend. So this, to me, again, the pattern looks a bit bullish. I just don't love that we rallied up big, although this is looking like this. Maybe there's a little pullback here. That's what we had, and maybe we're setting up for another one of these. I mean, it's very possible with Priceline. Maybe it does want to, pull another one of those moves. I don't really suggest a lot of retail playing this. It's an expensive stock, $1,300. Maybe here they finally do the damn split already. Apple did it. Even Google did it, for crying out loud. Just do it. They should play that Shia LaBeouf tape, right? The just do it, the craziness. And that probably would get a big gap up here. I'm sure there'll be some people talking about that ahead of earnings. They always do. But the pattern, does look pretty bullish. So here's a new one for me. I don't talk about this stock very often, Shake Shack. This has been down a lot on a report that Danny Meyer wants to sell his shares. I spoke to him on Twitter. I guess used a little bit of my bully pulpit. I'm, a little, ever since that journal article, I guess I'm a little bit famous these days on the stream. But I asked him, and he was very kind to respond. And he said that he wasn't, that basically that the story wasn't true, and he wasn't really looking to sell. Take a look here. The 41s were the reference low here. This was a look below with a hammer and fail, and for the first time in a long time, this is sort of breaking above the downtrend line. I actually got a little bit long here. I'm playing it right or right out. If this collapses, I'll be out of there so fast you won't even know what hit you. But just to me, risk reward wise, you're basically kind of near the old all-time lows. It just seems like there could be some kind of squeeze. This is still a stock with a relatively small float, and there could be a squeeze in front of the print. Here's an anecdotal story for you. And this is what I love. These kind of stories, I love to hear them about management. So I was at Shake Shack a couple of days ago with my mom, and we had burgers. And the table roughly was it was damaged. There was some damage in the table. And my mom tweeted Danny Meyer about the table, and he responded to her, and it was fixed the next day. That, to me, is a real CEO that really cares about his stock and his company and about running the business well. That's the kind of CEO I want to invest in, and I like, the risk reward with getting long Shake Shack versus these, on the lows, on bad, on what is considered bad news, and knowing that anecdotal incident. Those kind of things are the things that kind of define CEOs. The ones with, the Kozlowskis with the elaborate weddings, these are the guys you want to fade and short, not guys who are fixing tables, guys who are worth hundreds of millions of dollars, or I don't even know what he's a very wealthy guy, really great New York entrepreneur. That's the kind of guy I want to invest in, who fixes who's paying attention to his Twitter stream, who is fixing tables. Anyhow, and having a great customer experience. WYNN. Holy cow. I had discussed this being a put sale down here. It never quite got the 43s that I was looking for, but this was a professional gap, by the way. This is multiple day down, gap, go above the downtrend, had tons of continuation. This earnings report read like I've never read something more bearish. The guy was just, holy cow. We know that the Chinese now are going to kind of start easing a little bit on some of their restrictions in Macau and in wherever the hell they're building. I can't think of it offhand. There's another. They have more capacity coming on. I don't know that these guys are going to ever get back to the 200 level again, but yeah, maybe they get back up to 100. I mean, it's possible. That's really where this all really broke down from. But I do think that this could be a bit of a buy the dip stock from now, from now on. The 61.8 is roughly here around. This isn't right. Yeah, it is actually. Is it? Yeah. All right. So 61ish is the 61.8. I think between the 64s and the 61s, this was roughly these lows. If this does wind up coming back down, I think that this area could be a good right or right out. But if you take this earnings day high of day, 75.30, I think that this will break these highs and push higher, significantly higher. This was a big down move, and it got bought up. It did close down, but it did fill the gap at one point during the day, and it really, a lot of the bad news I think is built in. There was a lot of uncertainty with this, but I kind of maybe the worst is behind them. We'll see. If it comes down, this is the area. If it gets below there, just GTFO. If you start losing, the 60.55, this pullback low from the breakout, just get out because this thing is going to just collapse. That's my opinion, and you could, short it at will probably at that point. Let's end on the Tesla. Wow, this video didn't go quite as long as I thought it would go. It was long, but distinguished, kind of like anyway. So we're coming down. It's been multiple days. I had a lot of guys and girls and whoever were pushing shorts here, down near here. I had said last week around here that this channel low was going to be important. It was sloppy, but it wound up coming up. They added in some new features. The car can now kind of partially drive itself or whatever. Someone I know just got a Tesla. I have to ask her how she likes it. Anyway, so we're roughly right near trend. I was sort of hoping this would come down a little bit lower, particularly ahead of the number. It would be great if this just kind of continued, right? All ahead of the number. The risk here, I think, is somewhere between 95s and 91s on a move down. There's some references around here, the 204, 205. That was really the major risk range that I saw this potentially coming down to. Anything below 242, though, Elon Musk, that's where he did the secondary and bought in. And that, to me, was really key. We lost it. So now that what was support should become resistance. That's around the 50-day. So if it rallies back up into there, we'll have to see. It could. I do think that this stock is destined for higher. I had said up here I thought was the sell. I didn't really look back. Down here I was not really fully committing to being long, but I thought that it was starting to look better. I currently don't have a position in Tesla. I would be looking to get in if there is some type of a move down, though. I will say that. Or if there is some kind of a big move ahead of the number up, then then I might be thinking short. Anyhow, this week, a lot of earnings, I said. Monday is IBM, Morgan Stanley, and Halliburton. Tuesday is Yahoo and Verizon. Verizon's going to be key. There might be some read-throughs for Apple on Tuesday, so be careful. eBay, Wednesday is eBay, American Express, Biogen, which is going to be key for IBB, Boeing and Coke. That should be a big day for the Dow. Thursday is Google, Amazon, Microsoft, Eli Lilly, and AT&T. Also watch that for read-through for Apple. And then Friday is just Procter & Gamble and American Airlines. So we'll see. There's some other ones in there, but those are some of the important ones that I picked out that I thought were important. Anyhow, if you're not following me, follow me on Twitter. My handle is @JustinPulitzer. If you're watching this video and you're not subscribed to my channel, hit the subscribe button. You'll get alerts when new videos come out. You'll get to see rebroadcasts of my Periscope in case you ever miss any of those, and also some special edition videos. I have a really great one coming out about short selling, and then also a risk management 2.0 that I need to kind of get pen to paper on. I have been working on them, but they will be done soon. Those will be fantastic. They're going to be huge. Anyway, hit the thumbs up if you like this video. Please leave some comments. Your comments and your suggestions help me make these videos better. I really rely on them. Thank you guys so much for spending the time and watching my video, and we'll have a good week, and cheers.